the announcements of the gold being bought on a monthly basis, on top of the accumulation, the change in presentation of the gold coming out is as important, if not important, as the gold being bought itself. China is coming out. China is letting you know. They're not getting in your face, but they're saying, hey, we're buying it on a monthly basis, and we're letting you know now. Now, why would they let you know? Either they want to sell it, and they're trying to get people to pump it up. China isn't NVIDIA. China isn't a hedge fund manager. China is letting their trade partners know that's when we should have started buying if we haven't bought before that. China buying on a monthly basis is an important signpost in the bigger picture of what's going on in gold.
Renowned analyst Vince Lanci suggests that China's monthly announcements of gold purchases represent a strategic shift in their approach to gold acquisition and communication, underscoring the significance of gold as a strategic asset in the current economic landscape. China's central bank continued its gold buying streak in February, marking the 16th consecutive month of adding to its reserves. This consistent buying spree has contributed to the surge in gold prices to record highs. Official data released recently indicates an increase of approximately 390,000 troy ounces in bullion held by the People's Bank of China, bringing total holdings to 72.58 million troy ounces, equivalent to about 2,257 tons. Lanci posits that China's public disclosure of its monthly gold buying activities may serve as a message to the global community and other BRICS nations, Brazil, Russia, India, China, and South Africa, regarding the importance of gold as a strategic asset. The past year has witnessed a notable uptick in gold reserve accumulation, primarily driven by diversification strategies. Notably, China, Germany, and Turkey have spearheaded a global effort to safeguard assets amidst concerns surrounding the current state of the US dollar. Lanci suggests that such a move could potentially prove advantageous in a worst-case scenario for the United States. Gold has increasingly become a haven asset for investors, particularly amid periods of dollar weakness. This sentiment is echoed by several countries, reflecting a broader trend towards de-dollarization in global economics. As such, the strategy of diversifying into gold has gained popularity in 2024. Join us as we explore Vince Lanci's insights. Stay updated by subscribing to our channel and activating notifications. Thank you.
Last month, China's central bank added gold to its reserves for a 16th straight month. The People's Bank of China now owns 72.58 million troy ounces, equivalent to 2,257 metric tons, after adding about 390,000 troy ounces last month. The commodities feed. China buys more gold in February. We have that attached. Continuing, central banks bought 1,037 tons of gold last year, just shy of the all-time high of 2022, as shown by data from the World Gold Council. As reserve diversification and geopolitical concerns push central banks to increase their allocation towards safe assets. That continues in the report. You're not going to hear what I'm going to tell you in any report anywhere. Maybe it doesn't make sense, but it does to me. I've had conversations with Bai Zhaojun over the last year, and we've talked about China's politics and China's desire to play nice in the sandbox when the other players play nice back. Well, I want to take a look at this chart in context of that comment. You'll take a look and you see I don't have the dates on there. So between the 1970s and 2000, China was not interested in buying gold. Between 2000 and 2005, they bought a little bit, announcing it occasionally. Between 2010 and 2015, they bought a significant amount of it. That was announced all at once. It wasn't announced on a monthly basis. Between 2015 and 2020, it was mostly bought all at once with some announcements. Between 2020 and 2022, there was no buying, right? That's this area up here. And now, every month, they're announcing it for 16 months. So what's the first thing that you see from this chart? You see them buying a lot of gold, and you see them continually buying now. What's different now compared to back then? In the past, China culturally does not like to rock boats. They play well in the sandbox. Doesn't mean they're to be pushed around. They're very strategic in their thinking, and they're not interested in pissing someone off just to get the upper hand in the press. That's the Russia-America dynamic. China is violently neutral, but self-interested. So during the era before 2022 onward, China would buy gold quietly. They would buy gold and announce it on the back end. Now, some people would say they're being sneaky. You know what? Maybe they are a little bit. But the fact of the matter is they weren't telegraphing to their people. They weren't telegraphing to the world that they wanted gold. They were just buying it and then announcing it periodically. Now they're telegraphing it every month. That's what's different now. And every month they telegraph buying gold. That's a change in their style. That's like them saying, we want you to know we're buying gold. Now, who are they telling that they want to buy gold? They're telling their fellow BRICS people. They're saying, hey, we're doing what we said we do. We're doing what we said we do. They're telling the rest of the world, hey, gold's going to be important. And the U.S. is just catching on to that, I think, this week, sadly and ironically. But anyway, the point of this is the announcements of the gold being bought on a monthly basis, on top of the accumulation, the change in presentation of the gold coming out is as important, if not important, as the gold being bought itself. China is coming out. China is letting you know. They're not getting in your face, but they're saying, hey, we're buying it on a monthly basis.
NVIDIA's share price took a significant hit on Friday, plummeting over 5.50% and wiping out approximately $128 billion of investor wealth. The NASDAQ-listed tech giant, often hailed as the poster boy of AI in 2024, experienced sharp selling during the Wall Street session, closing at $875.28 per share. This marked a steep 10% decline from its all-time high of $974 per share. The day began with NVIDIA's stock opening at $951.38 per share and reaching a new peak of $974 per share during Friday's trading on the Nasdaq. However, the euphoria was short-lived as profit-taking triggered a downturn in the stock price. This trend was exacerbated by selling pressure in the broader S&P 500 and Nasdaq indices. Vince Lanci presents NVIDIA's meteoric rise in stock price as symbolic of the current state of the equity bubble. He cautions investors to approach the situation carefully and be aware of potential risks associated with inflated stock valuations. Let's get back to the interview.
NVIDIA closed Wednesday 42% above its 50-day moving average. It's the highest close above its 50-day moving average since 2003. Back then, 2003, when NVIDIA closed that high relative to its moving average, it was a $2 stock. NVIDIA is now a $2.3 trillion market cap. Apple's market cap is about 2.6. So we're a couple big days away from NVIDIA being worth more than Apple. Think of that, right? I mean, whether you think it's right or not, it's kind of impressive. How big is NVIDIA's market cap now? Well, it's bigger than the other 30 names in the semiconductor index combined, right? So AMD, AVGO, QCOM, Intel, TSM, etc. That's how big NVIDIA is. Now, that's, by the way, those insights are from Goldman Sachs' institutional trading desk. So thank you for that. We're going to put this in perspective for you. Let's look at the chart first, right? There's the chart, right? There's your 50-day moving average. There's what the market is. Basically, if you believe that all things every so often regress to the mean, well, this one is really getting away from the mean. Make of it what you will. Here, we're going to put this in perspective for you, but not necessarily tell you what you should be doing with your portfolio. Chips, which I have been a big proponent of, and I started pushing those, pushing is not the right word, but I started alerting readers to those last year, a year and a half ago. They are a commodity. And what I mean by that, they're money, they're a commodity. I'll put this quote out here for you. NVIDIA's competitors are rapidly expanding investment in the same technologies. Companies like Huawei, I'm not sure how to say their name, are quietly investing tens of billions of dollars into chip manufacturers that over time will revert semiconductors back to their qualities of the previous cycle. A commodity, but we're in a hardware innovations phase, and NVIDIA is the only thing out there that has it, so people are piling into it. So on a relative value basis, if you had deep pockets and you had a lot of patience and you had some good analytical skills, you'd be saying, I would want to short NVIDIA and buy these other companies. The reason you would not do that, unless you were completely in control of everything in your life, is because if NVIDIA drops, when NVIDIA drops, I should say, it's going to take everything else with it. And you don't really know how much everything else is going to go down. So this might be a 5-year trade, not a 5-month trade. You can blow out in 5 minutes. Anyway, that's the status of our bubble. That's the state of the equity bubble right now. NVIDIA is where it's at. Partnet will probably have something to say about that as well.
Considering the recent uptick in gold reserve accumulation by countries like China, Germany, and Turkey, do you believe diversifying into gold is a prudent strategy amidst concerns surrounding the US dollar's stability? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.